Days of turmoil in the banking sector still ringing loudly in the ears of investors everywhere. The rout at Credit Suisse and the collapse of three U.S. lenders triggering wild swings in the markets and reviving fears of a contagion that could lead to a global recession. The OECD has added its voice to concerns over regulation of the industry. I spoke earlier with OECD Secretary General Matthias Cormann exclusively from the Financial Sector Conference in Riyadh, Saudi Arabia. Mr. Cormann, thank you for joining us this evening. Well, financial regulation is under intense scrutiny again as Credit Suisse fights for its life and the Silicon Valley Bank collapses. What can be said about the current state of global banking standards, and what is the OECD's response to this crisis?
Well, the Silicon Valley Bank failure is a very significant failure. It's the biggest bank failure since the global financial crisis back in 2007, 2008, and it certainly now raises a series of questions for regulators to answer, including and in particular whether this bank should have been treated as a systemically important bank for the purposes of regulatory supervision. Having said that, our assessment is that the banking system in the US and globally is well capitalized, and we don't see that this is going to cause a broader systemic issue. But having said that, I mean, this is a level of financial turbulence that increases the level of risk in the global economy and in the US economy, and we certainly need to make sure we learn the lessons very swiftly of what has happened and why.
Mr. Cormann, President Joe Biden has said he's going to get Congress to look at, strengthening those regulations. Tighter regulation has the potential to stifle growth. So what do regulators need to do in a situation like this?
Well, I mean, what's important is to, get the balance right. I mean, you don't want to stifle growth. You want to ensure that regulation provides certainty and stability, but also, of course, facilitates the continued economic development, innovation and growth. But, I think that there are some particular features of what has happened here that should cause all of us pause for thought, and certainly on the face of it, I believe that there are some things that regulators will be able to do quite sensibly to improve the level of supervision and oversight without stifling growth.
Well, what is your outlook for the global economy this year? I mean, we are already seeing some cracks in the financial sector because the Fed raised rates too quickly. So we are about to release our revised and our updated global economic growth outlook tomorrow. Our last outlook was released in November. Let me just say, well, of course, our outlook for the global economy remains more subdued than what it was before Russia's war of aggression against Ukraine. So the world continues to pay a heavy price in terms of the economic and social impact of that war. But having said that, we do expect that the global economy to continue to grow. We do expect the US economy to continue to grow. And our outlook today is slightly brighter than what it was in November. But then how big a concern is inflation for the OECD economies, given that energy and food prices, they are much lower than their peaks last year?
We need to continue to take steps, and we need to continue to do what needs to be done to tackle inflation. Certainly our view is that central banks around the world, having taken very assertive action, is appropriate, and central banks need to continue to make the decisions that need to be taken in order to get inflation under control. A combination of the impacts of monetary policy, slightly lower growth, lower demand on the back of monetary policy taking effect. I mean, we do believe that we will see an easing of inflationary pressures over time. Already, energy and food prices are significantly lower than what they were at the peak post the Russian invasion in Ukraine. So, I mean, we do expect that as a combination of monetary policy, fiscal policy, more aligned with monetary policy, and indeed impacts of monetary policy tightening on demand and the global economic outlook,
we do believe that there will be an easing of inflation over time.
Yeah, but given, the developments over the week, is recession, looming larger than ever in Europe and the US? And are Asian emerging market economies going to be able to come out unscathed? How much of this will then also depend on China's revival?
Well, look, there is a lot of downside risk in the global economy. The economic outlook is fragile. The world would be much better off if we had, for example, a just and lasting peace in Ukraine consistent with international law as soon as possible. And there's a whole range of things in the global economy that would help improve the outlook. But right now, we need to continue to do what needs to be done to get inflation under control. We need to continue to ensure that fiscal policy doesn't make the inflation a problem worse. We need to continue to pursue structural reforms that also help to reduce inflationary pressures. And we need to take this opportunity to pursue the green energy transitions and the digital transformations of our economy. A lot of challenges in front of us, but in the end, we've got to continue to work through those issues one by one.
Mr. Coleman, what is your expectation of how Asia will navigate this rather tricky and turbulent period?
Well, our growth outlook for Asia is, for relatively strong growth and a strong recovery, subject to a level of downside risks. I mean, the Chinese economy reopening, of course, will lead to stronger growth in China, which will have a positive effect, across Asia as a whole and ultimately globally. Though, of course, it will also have an impact when it comes to, for example, the price of energy moving forward.
Well, I do want to talk a bit about the potential debt crisis that is looming around the world. What is to be done about that? Because of higher rates, 15% of low-income countries, they are already in debt distress, and another 45% at high risk. Is a global debt crisis avoidable?
Well, in the end, that requires positive international cooperation. I mean, you're quite right. Low-income countries in particular are under huge pressure, given the levels of debt and given what's happening to interest rates. And, certainly the international community, predominantly via the G20, needs to continue to work on effective international solutions to help provide the necessary support to low-income countries in particular.
Mr. Coleman, in an increasingly bipolar world, we're seeing, East versus the West. How should policymakers in the OECD use this opportunity then to improve the current framework for debt restructuring and crisis management?
Well, I mean, what we seek to do is to facilitate inclusive international dialogue. We seek to provide platforms to help find solutions, balanced solutions to the evolving challenges of our time. I mean, one of the big reform agendas that we've pursued in recent time is the reform to international tax arrangements to help ensure that governments around the world can raise the appropriate levels of revenue on the back of economic activities in their jurisdictions, making international tax arrangements fairer and work better in an increasingly digitalized and globalized economy. And of course, making sure that governments can raise the appropriate levels of revenue is a very important component to that fiscal resilience, fiscal sustainability, and the capacity to address those debt challenges that you're talking about.
Mr. Coleman, given that the Russia-Ukraine war is still ongoing with no end in sight, how vulnerable are developing countries in Asia, Africa, Latin America to those food and energy price hikes?
Well, the world would be better off if we could have a just and a lasting and comprehensive peace for Ukraine, consistent with international law and consistent with the terms as set out in the UN resolution that was overwhelmingly endorsed by countries from around the world in the UN General Assembly a couple of weeks ago. So certainly, developing countries, emerging market economies and advanced economies all would be much better off if we could have a just peace in Ukraine as soon as possible.
And that was our exclusive chat with head of the OECD, Mathias Cormann.